Brad Williams, Frugal Finance. Let's talk a little more about commodities. How to read future price tables. We're going to use corn as an example, and price is the key statistic generated by futures markets. Although the volume of trade and the number of outstanding contracts, open interest, also are important. Prices are available from a variety of sources, including many daily newspapers. Most papers also report volume and open interest. In other words, online. Since wire services and newspapers vary in their format and terminology, here we will describe price reporting formats in general terms. Using CBOT, corn future prices as follows. CBOT, Chicago Board of Trade, grains and soils. This is 5,000 bushels of corn. In other words, you buy one contract for corn, you're on the hook for 5,000 bushels of corn. All right. So if you go, oops, I bought the contract, but then I got sick. I didn't tell anybody about the contract. And now the contract is expired and somebody's going to deliver you 5,000 bushels of corn. What are you going to do? All right. It's been known to happen. So here it is. Estimated volume. Here are the different contracts. We have May, July, September, December. Then the next year, March. So we have quarterly contract. We have an open. We're going to have a high, low, settle. We're going to see a change. This is the all-time high, all-time low, and then the open interest, number of contracts for this particular contract. We have estimated volume 38,000. Wednesday's volume 38,592. Open interest 347,986. And then that's up 987 contracts. If you don't understand what this is, there's trends, and you're going to see if you have this huge explosion of volume, kind of stating there's probably a shortage of corn, and you're going to see volume increase and probably prices increase. Or on the other hand, there could be an oversupply. You're going to see this huge dumping of prices, and you can see this huge volatile action within any particular commodity or stock, but we're focusing just here on the CBOT. The third line of the table reads as follows. Corn, CBOT, 5,000 cents per bushel, and means that the table applies to the Chicago Board of Trade corn contract, and the contract size is 5,000 bushels. The price shown in the table are in units of cents per bushel, so 252.75 means 252 and 3/4 of a cent per bushel. The open or opening price is the price or range of prices for the day's first trades registered during the period designated as the opening of the market or the opening call. In our example, this year's May corn on the Chicago Board of Trade opened at $2.52 per bushel. Many participants print only a single price for the market open or close, regardless of whether there was a range which trades at several prices. Many publications print only a single price for the market open or close, regardless of whether there was a range with the trades at several prices. The word high refers to the highest price at which a commodity futures contract traded during the day. The high price for this year's May corn was $2.52 and 3/4 cents per bushel. Low refers to the lowest price at which a commodity futures trading during the day. The low price for May corn was $2.50 3/4 per bushel. Some publications show a close or closing price in their tables. The closing price is the price of or range of prices at which the commodity futures contract traded during the brief period designated as the market close or on the closing call. That is the last minute of the trading day. Because the last few minutes of trading are often the busiest part of the day, with many trades occurring simultaneously, the exchange computes a settlement price from the range of closing prices. The settlement price, which is abbreviated as settle in most pricing tables, is used by the clearinghouse to calculate the market value of outstanding positions held by its members. It is also frequently used synonymously with closing price, although they may, in fact, differ. The change refers to the change in settlement price from the previous day's close to the current day's close. The negative 0.25 or 25 cents change for July corn indicates that the previous day's settlement price must have been $28.25, i.e. 258 plus. The lifetime high and low refers to the highest and lowest price recorded for each contract maturity from the first day it traded to the present. I would like to split this so I could always show this, but I don't have control of that. Open interest refers to the number of outstanding contracts for each maturity month. Some publications do not include this information. At the end of the day, another line or information appears. Estimated volume 38,000, Wednesday 38,592, open 348,967 plus 987. Estimated volume indicates that the estimated volume of trading for that day was 38,000 contracts. Volume Wednesday means that the trading volume from the previous day was 38,592 contracts. Open interest refers to the total open interest for all contract months combined at the end of the day's trading session. The 348,967 open contracts represents an increase of 987 contracts from the open interest of the previous day at the close. Some publications may differ slightly in their reporting format, for example, quoting grain prices in dollars per bushel rather than cents per bushel. Also, some newspapers group futures contracts by exchange, while others group them accordingly to the type of commodity, for example. So more than likely, I'll get punished for this, but I just went over to the Wall Street Journal, and here's their futures publication, and then you're going to see how they report it. They're just going this particular price. Let's go to ag, and then you're going to see, well, where's corn? We can't get anywhere. Everything's locked up here. So here we have corn, March, 484.75. So this should be $4.84 and 3/4. They're reporting it just like CFTC. You're going to see the change, open, high, low, etc., etc. That's just an example. Feel free to comment. Let me know if you're a futures trader, any secrets, your successes, your failures. You know, a lot of people that stepped into this arena and they stepped out quickly. They lost all their money. Same old broken record. This is a tough game, a really tough game, especially if you're trading currencies or precious metal. So anyway, that's a brief introduction, how to read future price tables. Brad Williams, Frugal Finance. Thanks for watching.